Thank you, everybody, for making the time to be here with us this afternoon. The topic of discussion for us is why regulations and compliance is fundamentally a data science exercise. I'll be your host for this panel. My name is Jas Randhava. I am the founder and managing partner of Strategy Bricks. We are a boutique risk and compliance consulting business. Prior to Strategy Bricks, I was the head of compliance for companies like Stripe and Airwallex, and before that, I managed PwC's financial crimes business for the fintechs of the West Coast. I am joined here with me today on my left with, this is Matt and Anna from Stripe, Asif from Compliance AI, and Simon Taylor. I'll let the folks introduce themselves before we dig right deep into the questions. Matt, do you want to go first?
Happy to. So thank you all for coming here. We promise we're going to make this topic exciting and interesting, which we obviously all believe regulation is actually quite an interesting thing. I'm a co-founder of Hummingbird RegTech. We're a global case management investigations platform, previously a regulator with an agency under the U.S. Treasury Department, and I was also the first head of compliance at Circle.
Hi, and I'm Anna Davila. I lead Stripe's anti-money laundering intelligence unit. My prior experience is in the consulting space, mostly focusing on pre-transactional due diligence, complex investigations, fraud, etc. Do want to clarify, I am not speaking on behalf of Stripe today. All opinions are my own.
Thank you, Anna. Asif Alam, CEO, Compliance AI. It's a RegTech firm, and happy to talk more about it. But my background is that I have been in the fintech and RegTech, legal tech for 20 plus years. Used to be at Thomson Reuters, and then subsequently with a few other startups.
Hello, everybody. I'm the British guy on the panel because every panel needs one. My name's Simon. I'm head of strategy at a company called Sardine, which is a fraud and compliance platform used by crypto and fintech businesses. So we see some fraud and we need some compliance. But also I'm best known as a blogger. So Fintech Brain Food is a free weekly newsletter where I cover topics, and regulation and compliance and data science are one of my passion projects, so I'm glad you showed up to hear more about it.
Thank you, everybody. So we're going to start the discussion by talking a little bit about the evolution of compliance over the last 15 to 20 years. Compliance as a function used to be very legally driven. Technology used to be a second thought. And a lot has happened since then till about the financial crisis, which we've discussed as being an inflection point. Asif, if you don't mind sharing your thoughts on how you've seen the industry change over the last decade or so.
Thank you, Jas. Yeah, it is really interesting, the evolution, if you will, of compliance and regulation that has become front and center through many transformations that has taken place. And it's really driven by the complexity and the velocity of what we are seeing. Complexity meaning, the world is more digitized, things are becoming, it's not physical, it's digital. How do you actually do that? Everything is becoming more global. And I used to be in New York, have relocated to San Francisco since, but I was here in 2008, the debacle of the financial crisis.
Is that what happened then?
And what I remember very vividly is that post that, all the banks, if you go and visit the trading floor, that all of a sudden, technology became a must-have, not a nice-to-have. What I'm seeing now, as we're going into 2023 and with everything we are seeing, that technology now is becoming a must-have, not a nice-to-have in the Office of General Counsel. When you talk about compliance, when you talk about regulation, when you talk about risk. And it goes back, it connects the dot again to the very fact and the very fabric of, all the regulators are just not reactive, they are being proactive. There are a lot of things that are coming in which was not there. So again, velocity and complexity is the major reason.
I think, not to give away my own age, I distinctly remember I've been doing about compliance for about, I'd say 7, 8 odd years, more on the tech side, till the time the crisis happened. I distinctly remember sitting down with my wife and telling her, I think I'm wasting my career and I need to get out, probably build some products or do some more front-end stuff. And not to say, thankfully, that the crisis actually happened. I think things started to evolve a lot more. Being a technologist, an engineer by background, working a lot on systems, I used to struggle explaining to people what my job was. There was a compliance officer who I had to deal with, who came with a very heavy legal background. And then there was IT in the back that was fixing data and systems for you. And here I'm sitting in the middle. I can talk to both of them, and I understand what they want, and I understand what they can produce, but there was no definition. I used to use this term about, oh, I'm the bridge between compliance and tech and IT and whatever. But you could see that whole transformation happen as technology evolved. Simon, any thoughts, any inflection points you observed during that point?
Yeah, I mean, massive. I think fundamentally, technology in financial services was a cost center, not a competitive advantage for a long time. That started to change with the tech boom. And since 2008, compliance didn't yet become a competitive advantage, although I think now we're starting to see, in 2008 at least, it became a really important focus and a need for innovation, and technology could help us. And of course, we gave birth to RegTech, regulation technology. We've now got a whole category focused on this space. But given the recent banking crisis, I think we have a crisis of trust generally, whether it's banks, whether it's fintech companies, crypto. There's a crisis of trust amongst consumers, amongst businesses, amongst regulators about what am I fundamentally getting here from these businesses, and is regulation working? The Consumer Trust Index across all financial services has really, really come down. So I think now being really good at compliance is a competitive advantage. I mean, Matt at Circle, one of the reasons they were able to get as far as they did so long is because of those relationships with regulators, but also the application of data science to what is fundamentally a data science problem. Because if you think about what regulatory reporting is, if you think about what examinations are, it's about prove you're following these rules, which the rules are really about prove you're not being a douche, prove you're not messing up, prove that you are doing the right things for your customers and society and everybody else. So how do we observe that? How do we make sure that's the case? Well, usually it's in the form of a PDF that comes out of the back of a system built in the 1970s. That regulatory reporting is probably going to be hard to read. We have this wonderful thing now called large language models that can read PDFs and do amazing things. So that's why I think the title of this panel is the most interesting thing I've ever seen. The problems we face in society, one of the biggest ones we have is we have a lack of trust, and lack of trust in financial services. But data science is an art form and a science, and we should think very carefully about how we start to apply it to financial services. And then whether that's inside of a financial institution or a fintech company, or inside of agencies as well.
That's such an interesting perspective. As we look, more ahead, 5-10 years from now, Matt, we've spoken a lot about the profile of a CCO evolving. It already has evolved. What do you think in about 10 years from now a CCO in their org would really look like?
I think the top credential that makes you qualified to be a compliance officer today and for most of history, since these rules were put into place 50 odd years ago, has been how much of a human encyclopedia you can be. You need to remember what 12 CFR 32.5 whatever would be means and be able to cite it to your examiners. So obviously it tends to have a lot of lawyers in there, people who have that kind of mindset. My experience, first exposure to working with real engineers in data sciences was at Circle. I met my co-founder of Hummingbird there when I basically started kidnapping engineers and data scientists from his product team to build tools for my team. And my role rapidly evolved into being the bridge between the regulatory knowledge but being able to translate into what the product team could understand. They would often ask, okay, why do I need to do this thing, and why does it need to be done that way? And the first question is very important, I think, because it cuts to the core of everything we're talking about on the panel here, which is the reasons why these regulations in place are meaningful. It's protect people, it's keep bad actors out of the financial system. The second question is maybe even more important because it's why does it need to be done this way? The model that we have was basically established in an era before we had computers. We were assuming it would be people and paper doing the work. And that's really not the case anymore. We could not, to Simon's point, it was not measurable. We didn't really have a means of proving that it was trustworthy other than sending auditors in to go look at things, pull samples and dig through a bunch of PDFs. But now, if you actually have a compliance team that's equipped this way, they can actually start to prove the results of the methodologies that they're using. So, to your question, I think the profile for the compliance officer of the future is no longer, they still need to understand the regulations and why they're there. They don't need to be the human encyclopedia anymore, though. They need to be almost like a product manager that is able to have subject matter experts that report up to them, but is also data scientists and engineers who know how to implement those requirements in their products themselves, kind of like a compliance by design principle. And then also, more importantly, how do you measure and prove that you're achieving the results that you are supposed to be?
Interesting. So the lawyers are not going to cut it, basically. So I was on a panel yesterday at ACAMS. You were talking about analyzing, securing EML data, and in genuine, good, true spirits. I did mention, I was asking a genuine question to the panelists about, you think compliance officers should be sent to SQL school, Python school, should they understand technology? And unanimously, everybody laughed at me. And for a minute, I was shocked. I had some transformations in my career, especially at places like Stripe, where when we used to hire investigators, they would go to SQL school. They could pull their own data. They could analyze their own information. They could do basic dashboarding. Anna, what are your thoughts in terms of embedding technology within the investigations function and the compliance orgs largely?
Yeah, thank you. I think beyond the compliance officer role, it's just the role of data science is growing, right, within the compliance space. And that will inevitably redefine how we work within compliance, how we hire for compliance, or where we place value in terms of skill sets. So we talked a little bit about compliance officers. Data scientists need to be embedded in these teams. It's no longer a nice to have, it's a must have, and it's really our best bet at tackling both the challenges of how complex the economic and financial system is today. We have the fintech space is revolutionizing how we think about money and the economy. DeFi, crypto, all of these challenges come with big data. And our best bet at tackling big data is through data science. Not to mention, we're not the only ones looking at technology, right? The bad actors and the bad guys are also trying to innovate and learning how to leverage technology. You take a little dive into the dark web, and all you see is tutorials being sold on how to exploit financial institutions and fintechs. So really leveraging data science is our best bet at tackling these two challenges that are inevitable. They're trends that are traveling at the speed of light. And so for me, it's very natural to think that investigators, especially the investigators doing the heavy lifting of the work within AML, need to be equipped with all these tools, right? And the roles are going to be less isolated, I think. They'll need to interact more with data scientists because machines can't replace humans, right? There still needs to be a dialogue and a tuning process. So I think these roles are just going to become more cross-functional, more complex, and more diverse.
Can I just add one more thing in there is, again, as we were talking about the evolution as it's taking place in front of our eyes, COVID happened. And one of the things that I saw was that the physical branches were forced to go away. Community banks, they were forced to go online, even really right. Against their DNAs. Well, one of the first things they did when they went online was they then started seeing customers from other states. Well, in the previous world, their compliance officer or compliance group was very small, knew about, let's say it was a community bank in state of Georgia, or, knew very much about, or even city of Atlanta knew everything about it. All of a sudden, Jazz from California is becoming a customer. Now you need to be compliant for the state of California also because you have a customer. So the complexity, it's not about how big of a bank you are, it's about how complex you are. And that is happening very rapidly. So again, and how do you do that? How you are efficient in that? It's not by throwing bodies, it's about learning, enabling, using technology, and that's where RegTech really comes in and data science comes in.
That's interesting. So I think there used to be a point in time when compliance and risk officers were known to be, they would just pump the brakes. They're the naysayers, they're the obstacles, and basically they would go back and hold things back. There's been a very significant evolution where on the fintech and the crypto side, you've had very commercially minded compliance and risk officers who are enablers and support business and growth. And even in the conventional institutions, there's a lot of, the mindset has shifted where folks want to help and be more engaged with growth teams. I want to pivot a little bit and talk about what are the real challenges do you guys feel they see in, on a day-to-day basis and being able to get investments, being able to make changes? What discussions are they having, and why? What are the real struggles? Simon, any thoughts if you want to go?
Yeah, I've never worked as a compliance officer, so I'd look to the panel for that. But as you were talking, the pump the brakes thing really stuck with me, actually. And that was the adversarial relationship of the business prevention officer for a long time. And actually, if I think about the world's best users of the brake pedal, I think about F1 drivers. Drive to survive. The way you go the fastest and the way you win the race is knowing when to apply the brakes and to apply them extremely hard when necessary and softer at other times, and when to accelerate. And I think that's exactly the role of what we always called the risk-based approach. That is a risk-based approach to controls. And so that too is a data science problem, because the more data I have, the more effectively I can manage all forms of risk. But no, what we did historically is we had a fraud system, and we had a transaction monitoring system, and none of the data in any of these things talk to each other. So if I treat it as a data science problem, I treat it a little bit differently. So I think the mindset shift there of when I spoke to a sardine customer who said, we realized that when we started tweaking our payments interchange, we were really arguing over basis points with our providers. But when we looked at the fraud levels and we really started understanding where our false positives were, where we could start to really maintain our position with other issuers by getting our fraud rates down, we saw we were dealing with percentage points. So what's more meaningful? If I can get my false positives down, if I can get my fraud rates down, great. But actually, I'm making percentage points difference to my bottom line. I'm no longer a business prevention officer. I'm the most important business creation officer in the company.
Interesting.
Sorry, great point in there, right? Because again, data, as everybody says, is the new oil, but it's the refined data. And it's another point that I want to make is, to your point, Simon, is that you have the capability now through technology, through data science, to bring all these different data sets together and squeeze it different ways. You do it, there is no reason to keep the data in a silo fashion. Bring it together and make most out of it. How do you do that? Through data science. That's the power of data science, that same data that is sitting in there, you can reduce your risk, you can increase your profitability by bringing everything together. And that's where what we are seeing is that the CROs and the really Office of the General Counsel, they have seat on the table of just not about preventing company from losing money, but how do you actually make more money? How can you be more so that's the change. And how is it coming up? It's through the data science.
Interesting. So I think on the Hummingbird end, Matt, you guys play a pretty significant role when all of this information converges for compliance officers, risk officers to leverage and to do their jobs on a day-to-day basis. What kind of impediments do you see when you see the use of machine learning, data science? What's holding the industry back?
I've always had a belief that the arena, the compliance, RegTech, and anti-money laundering arena is one of the most difficult areas to deploy machine learning. Mm-hmm. And the fraud area is it's more straightforward because you have a very clear cut, like something, you lost some money, fraud happened, very easy to label that data. But in the compliance world, all the training data sets you need to actually build machine learning models are basically locked up in 1,000 different spreadsheets and in SharePoint. And the amount of work needed to clean that data up and make it available to feed back into models is significant. And if you don't have your compliance team that's actually equipped with engineering and data sciences resources, it's effectively impossible. You're kind of like taking, it may be weird to be saying this as a vendor, but if you don't have that in-house capability, you're basically handing control of your destiny to whatever vendor you pick, and you're going to be stuck with them for a long time. So the biggest challenge is getting the data and getting it in a format where you can have feedback loops from different systems. They're all talking to each other, standardizing it and such. And I think to elaborate on Simon's point there, this is moving away from, like, the compliance data sets and everything we're talking about today are very procedurally oriented. It's sort of how good are you at executing against your documented procedure. I think what we need to really be orienting towards in the future is how well do you learn from the data that you're getting in real time. Like your function, we have a very strong status quo bias in the compliance and regulatory world. It's like if something is new, when your regulator comes in and looks at it, they're going to focus all their attention on that new thing and ask you all sorts of questions like, why did you change it? In some of these cases, it's like, should be fairly obvious because the old thing wasn't working. And we think the new one is. But if you're able to then sort of show how, I mean, in the financial crime world, the bad guys are people. They're out there, they're actively evolving, they're embracing new techniques. They're trying to optimize to get the most money out of you or launder the most money through you as they can. And we need to be able to be fast learners, be very agile, and not hold ourselves to the standard of sort of what's been documented for the past decade, but hold ourselves to the standard of saying, okay, this is how fast we stay on top of, or how fast we adapt.
That is so interesting. I think in a conversation with Ben Lawsky, who spearheaded the New York DFS 504 regulation, which allowed the financial crimes industry to really hone in on what we're supposed to do on the transaction monitoring side, sanctions training side, and build an attestation program around it. At that point in time, we were trying to work on a bunch of machine learning models for transaction monitoring on the AML side specifically. There were numerous challenges in terms of the explainability of the model. A SQL-based model, easy to explain, this is the input, this is the process, this is the output. The examiner is walking in saying, in the 1st of Jan last year, can you tell me what happened? Like, it's a little bit hard to explain as I understand the machine learning model. And we were going back and forth about what can we do better. I'm sure the engineers can hack some problem and do some explainability. And at that point in time, I think he made a comment about like more than 75% of his actual workforce started before the email had invented. So it's going to be a little bit harder than that. Simon, you've spoken about previously, we can't have enough data. The more data we have, the better results we're going to have. Do you see a world in which the industry across border, like we be exchanging information with each other to get the best results for our compliance teams, risk teams, for better onboarding? What does that mean?
I really hope so. But this is the topic that comes up on every fraud, compliance, anti-money laundering, risk panel. Is like, we need to share data. It's like teenage sex. Everybody's talking about it, but nobody's doing it. It's like, all right, but let's get on with it. So, you know, Sardine just got 314B designation so that we can participate in it and that we can hopefully build an EWS for everybody else. And I'd love for everybody to get involved in that. But we're one organization, you know, a rinky-dink startup Series B, there's only so much we see. This has to be on every sponsor bank, on every embedded finance company, on every payments company. I mean, it's one of the reasons I think Stripe has its claim to fame is it sees so much data and it's able to do so much more with data science because it reached a scale and it was able to solve a lot of problems across the whole spectrum of being able to do that. So yes is the short answer, we need to do it, but let's not talk about it. Let's like show up to the Sardine one and show up to other initiatives by Unit 21 and let's actually collaborate. Like, don't hate, collaborate.
It's interesting. So I think from an AML investigations perspective, you know, there are some regulations that prevent free, you know, information sharing across, even like within organizations. I would love to get your perspective, Anna. You're in that space. You work with a lot of investigators deeply. You file a lot of SARs.
Yeah, and this goes back to your question on the challenges of implementation. We have a huge we have huge disparity in this space because we have obviously differences in sizes of companies and their budgets and their ability to invest and absorb these technologies. And if you take a step back, even within economies, right, smaller, larger economies, et cetera. But then we have the cross-regional, cross-country barriers. Even within the same organization, it's so incredibly difficult to share information on suspicious activity reporting, on investigations that are active, even on some high-impact typologies or tips we get from law enforcement within the same organization. So even the communication between subsidiaries can be incredibly challenging. And I think this has been called out by many agencies, including FATF. This is really one of the biggest challenges for this approach to work, right? And it's also part of the solution, right? Technology is here to solve for this problem, but it becomes this really complex cycle. And sometimes even though compliance professionals do want to share the information, we find the benefit, we want to do it. We're restricted by laws and regulations. And I think, again, going back to the topic of trust, the regulatory environment doesn't have a standard yet. We don't know what the paradigm is going to be in the next few years, where the thresholds are, what the expectations are going to be. And so it's very important for us in this industry as professionals to push for that as enablers in this space.
Wouldn't it be cool if there was like an open source standard that the industry just came up with? Like, let's just go build what we think it should be and have the regulators react to it. Because I think finding a way to do that. So I imagine if you are a regulator and you're on the regulatory side, you don't have all the answers. And sometimes it's a lack of just knowing what the art of the possible is from not being at the cutting edge implementing this stuff day in and day out. Whereas actually industry practitioners who are trying to prevent money laundering, working as good partners of law enforcement, could do that and then sort of start to put it out. And maybe it's open source, maybe it's something else, but that could be fun.
And that's what's fascinating about working in the fintech space. We're doing things for the very first time. So in a way, we're helping law enforcement and other private and public sector partners just to understand what we're seeing, because we're the first of them seeing them. You mentioned Stripe in terms of the data. We have products that are so incredibly complex, and we're touching new funds flows and ways of innovating that I think we hold a very big responsibility to be active in those conversations.
And the regulators have a very difficult job here because they need to be seen as authoritative. It's kind of part of their job. They set the terms that the entire industry operates by. But they don't have these skills in-house. Like, compared to what companies like Stripe and Square and Coinbase and have hundreds of engineers and data scientists, it's very difficult for government agencies to kind of recruit and maintain that same level of talent. So I think a lot of them, in their heart of hearts, understand what can be done here, but they can't. It's difficult for them to take the risk to try it. So I think to Simon's point, we need kind of industry leadership here that is grounded in what the regulators need and want to see happen, but we need to kind of build it for them in a way and help to lead them to a path that they can then trust.
I think at Stripe, we strongly participated in a bunch of public-private partnerships. One specifically that I'd spent about 2 years working with FinCEN and the BSAG it's an industry advisory group of about 10, 12 leading financial services companies, both from fintech, crypto, and the traditional the banking world. It changed my perception. I was quite intrigued to see the amount of interest they had. They were leaning in on the industry to really tell them what cutting-edge identity and verification really looks like. How are you detecting risk? How are you filing these SARs? What other information that you have? How can we be more competitive in the world and keep pushing our economy forward? But I feel that at some point, and not, if you're an early stage fintech, it's understandable. You're strapped on resources, you need to build your products, you need to get your market fit, and you need to be out there. But I think as you grow, it's increasingly more important to go and build those relationships, find those opportunities. Any experience you folks have in participating in these public-private partnerships, and how should organizations seek them out?
I think that's need of the time, right? Mm-hmm. And Matt and I were talking earlier that, again, to that thing that there is a responsibility on some of the reg techs also that despite, even if there is a little bit of overlay, that we need to sit together, we need to create that channel, right, of how are we orchestrating all the compliance need. And I just want to say one thing, which is kind of to the same note, that we in the world of the realm of the startups, we see a lot of fractional chief financial officers as you're starting your journey. You see a lot of fractional. I think we are getting to a point where you will see a lot of fractional chief compliance officers because of, again, in the realm of the complexity that is happening. And what we need to do is, again, the champions of the RegTech is to create that ocean that can be, where all the data is there, that you are actually creating that lake, which can be very friendly in that environment. So I think, that public-private is a key next step that needs to happen now.
I love the idea of fractional CCOs. It should also be a fractional jail term if you screw up. Just kidding. So I think this conversation is probably going to be incomplete if we don't talk about AI and the role AI and all the cool stuff that's happening right now around us is going to play. From an investigations perspective, do you think anything's going to change? I mean, we've been hearing a lot about, the machine's going to do the job and, we don't need any more investigations. Any high-level thoughts on it?
Exactly. The machine is not going to do all of the work. The machine is a great tool. It'll empower investigators. I think the role of the investigator is going to change. And this is already happening just because of the reaction to the complex environment we live in. I think if we go back to your point on public-private partnerships, there's always going to be an emergent typology that is based on a new innovation or just the political, social climate we live in. We've been seeing that with crypto. We saw that with January 6th, the rise of violent extremism in the US. So all of these challenges are increasingly changing the landscape of investigations, right? It's very easy to talk about AI or machine learning in the context of operations. We have the regular pipeline, the transaction monitoring rules, your traditional vanilla AML cases. My focus is more on the more challenging, complex strategic investigations, and I think intelligence units will play an increasingly important role in this space because the challenges are not as straightforward anymore. We need to be able to analyze connections, networks, behaviors. Segmentation is going to be incredibly important. The suspicious patterns are no longer limited to transaction patterns. That's what I'm getting at. So this is where AI will do two things. So one, it'll unblock a lot of resources and time because you're going to be able to do some things faster. Yes, the machine learning, the onboarding, the due diligence. So now you have more resources and more space. So what are you going to do with that? It's time to get strategic, creative, to make all these controls more proactive as opposed to reactive.
Got it. Simon, AI changing the realm of onboarding, risk detection, your thoughts?
Yeah, absolutely. It's a couple of examples that stand out. The first example is Sardine and many others have anomaly detection as one of the standard things. And talking about using more data sources, what showed up was that a bunch of people were signing up for accounts, passing KYC with what looked like verified identities with devices that were based in Omaha, Nebraska. There was just a high velocity of it, and our anomaly detector went, well, that's a little bit odd. What else is going on? And it turned out that every single one of those devices had a time zone mismatch, and the time zone was Lagos, Nigeria. Now, who spots that unless a machine is spotting it? And I think it's the ability to just detect that, something looks weird, maybe a human should look at this, which is the first starting point of any great use of AI. And let's not forget, the bad actors have AI too when they're training their models. So this is an arms race. We absolutely need to be involved in it in order to protect the customers. But I'm going to speak specifically about large language models like ChatGPT. I know Stripe is a big user of them. I was at Sessions last week, and some of the use cases blew my mind. But the one that I found that people really get is there's a company called Hadrius, Hadrius. They've just come out of Y Combinator. What they've essentially done is take the SEC rulebook for registered investment advisors, and this large language model can review marketing copy to spot anything that looks like it might not be suitable for investors. The other things it can do is take in Teams messages, WhatsApp messages, and start to look for evidence of collusion or other such nefarious activities. Now, Now, I don't know if I'd have started with the SEC rulebook personally, but there are interesting use cases here that you start to see emerge for AI. So we do need to be paying attention to this space, absolutely.
I also say that from an AI perspective, I've been playing with AI for as long as I remember, from my Thomson Reuters days to multiple startups. And the key, there are 2 or 3 things that we cannot forget. AI is our friend, one, right? I mean, there are a lot of things that are being said about AI, but to me, it's about efficiency, right? And ROI, that how do you do that? And bringing it to what we are trying to solve and the problem here through data science and everything, to me, the key message there is that, you know, in our space, the message is, the knowledge is very tribal, that Anna might know something, Matt might know something, Simon may know something, I may know something, you may know something. How do you bring it together? And that's the you know, connecting the dots of the data and bringing it together, and how does it make it easier? And it's, again, it's efficiency and enabling people of doing their jobs. So to me, AI should, regardless of it's in compliance and regulation or any other thing, should be seen as a tool that really helps you get your job done fast and without repeating things. Why do you, for example, you know, if you have a policy which you upload and you, President Biden goes and gives a speech, why do you need a consultant to come in and look at it and say, hey, my policy, is it still, you know, up and running, or is it compliant?
Well, that's because consultants have children. You need to feed them. Okay, so
they can still have a job. They can fix it, right? But that's a different job, right?
It becomes how, not what.
Yeah.
I need a job. We have a few minutes left. You might have missed the questions that came from the audience, so we're just going to go around. But I have one quick question that I want to run by all of you folks. You know, is there a point that we miss the intent of compliance and we play too hard by the rule book at times? And, you know, how would, you know, data science and this aggregation of data, how could that materially impact how we solve for compliance in the long run? Matt?
I have a metaphor I just thought of on the stage here, which I'm going to test, and we'll see if it works. I think a lot of compliance, the financial crimes world is an example. A former federal agent told me, a quote he let me use, was that we only catch the stupid criminals today because we don't have the time and resources to catch the sophisticated ones.
Good one.
So the metaphor I want to test is, like, most of this today is kind of the whack-a-mole game where the compliance teams are just whacking the thing that pops up. What we need AI for here is so we can understand the mechanics of the machine underneath and then actually kill the machine itself. And that's impossible for individual humans to do, but if we're all learning from each other, that's how we can figure out the underlying mechanics.
Hannah?
100% agree, Matt. I think we had to do what we had to do after 2008, right? With all the regulation, we need to check the box, we need to do the exercise. But compliance is about doing the right thing. And we have to remember that when we're in the compliance space.
Oops.
Okay.
Oh, look at that.
Pigeon, everyone. When you're in the compliance space, you also have a responsibility towards the financial institution and the economic system that you're operating in. So we need to do the right thing, not only for Stripe or for Sardine, right? We're players in a larger economic landscape. So I think there's a lot of that, and we're going to have the opportunity to do more of that.
Appreciate it. Asif?
I agree with both of you, and all what I'll say is that the time is now to use data science and to use the power of the data and really stitching data together. And the only way you can do it is using AI and data science.
I generally find, as a Brit observing America, it's surprising how very rule-following and orderly America is for a country that's so into freedom. You need to fill in the I-9 form and stand in the blue line so that you don't, oh my goodness, like, why can't I just, can I just moan about the line instead of standing in the right one? I'm British. But the interesting thing is we can learn from global perspectives, and we can learn from, I mean, you know, to complement the US, most dynamic private sector in the world, without question, bar none, it's the best. And that's an amazing, amazing asset. But with that, we can build better things and we can learn from the global best practice. So as you look to Asia Pacific, as you look to what India has done, as you look to principles-based regulation in the United Kingdom, there are the intent of the rules, and there is the ability, I think, in public-private partnerships to apply data science to the intent of the rules and show and evidence meaningfully better outcomes for consumers, businesses, and society.
Great closing comments. Thanks, Simon. Any questions in the audience? Okay. Thank you very much to all of you folks for making the time and to all of you for being here with us. Thanks a lot.
Thank you.
That was fun.